The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 18th, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, well, we've got you covered. Let those fingers do the walking. You know, the old yellow pages out there. All you've got to do is send me an email, steve@tfnn.com. We don't have yellow pages anymore. We've just got email pages, so to speak. Hey, inside that subject heading, please put radio show question. And in the Tiger's Den, any ping will do. So let's go ahead and get this show started on magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 10 points, basically flat. The S&P is up 5. That's 0.25% to the upside. NASDAQ is flat, up 6 points. Russell up 0.25%. That's up 4 points. The semis are off 0.3%. After a big, huge day on Friday. I don't think that is a big deal, but we can always check in on that. The other indices, New York Stock Exchange, Wilshire's to the upside. Spot volatility index is up 2%, trading out at 13.15. Gold is flat or back 80 cents. Silver's up 11 pennies. Light sweet crude 54 cents to the upside. Leading the charge to the upside, it's Amazon, dollar-wise, 27 bucks. AutoZone up 14. Edwards Life Sciences up 11. That's a 6.5% move. Chipotle up 11 bucks or nearly 2%. To the downside, it is Becton Dickinson off $11 or 4.5%. Boeing down 9 bucks, still above or right about at the support line of that breakout. Boeing does have some new profiles, daily and weekly, so we'll look at that. Synaptics, SYNA, down 21% or 9 bucks. That's taking a big hit in the shorts out there. So let's go take a look at, we had a request. First request coming in from down under, from Australia, from Jaime. So Jaime wanted to take a look at a couple of different things out here. Wanted to take a look at the Australian index, let's take a look at that. Let me see where I've got it. I've got it somewhere out here. There we go. So here we're taking a look at the ASX 200. Closed out the session at 61.90.50. Now you're going to see a lot of colorful, we like color in this community here, a lot of colorful lines. The horizontal lines are the daily, the weekly, and the monthly horizontal trading range. So let's just simply start with this equity by taking a look at it. Blue are daily. Green or lime green, happy, by the way, happy St. Patty's Day out there, or, you know what I mean. Those are green, and red are the weekly. That is green, and the monthly are the red levels out here. And then you'll see some miscellaneous diagonal lines. Those are some trend lines. that are being drawn out here. So what do we know in taking a look at the S&P Asia 200 for Australia? Well, we know that 61.92 is a level of support. Price have been trading around there for the last several days. If support holds, what does this tell us? By the way, a few days ago, you can see in looking at the screen, although albeit small, it was a nice little hammer candle out there. You know, we'll take a look at another chart just to get another feel for support and resistance out here. But right now, on a daily basis, this is the daily chart we're looking at. Prices held the weekly horizontal trading range level at 61.69. Says the Steve-O that price is headed to 62.41. And if it can clear that area, 6,300 is what is in play. Now, what Jaime also wanted us to take a look at was the Australian dollar. And so the question I posed to myself is, hey, the Australian dollar, and taking a look at the Aussie 200 S&P out here, is there a correlation? Is there a indirect or direct correlation? So here we've got, we'll take a look at the Australian dollar as well for Jaime. But here what we can see is it's kind of a coin toss. You see bars that are above zero to the upside. That tells you there's a positive directional correlation. Now, the correlation time frame that I have out here that it's averaging is a 5-day correlation. It seems fairly logical, or does to me. We use that as kind of a standard. We can use longer time periods. We're just staying with daily charts right now. And so you can see there's an indirect correlation when the bars are to the downside. So we're going to say, hey, just evaluate the ASX, the ASX 200. Just simply evaluate it on its own. Don't let the currency impact this. Now, I don't know if Jaime just wanted to look at the Australian dollar and not this, but here I'm going to eliminate the use of what's going on from a currency standpoint versus the indice. Now, before we go to the currency pair, not to get you too confused out here, if we go to the ASX 200 and take a look at what else has transpired out here, what we can see is, in order for this to really get some more momentum to the upside, the high that it needs to clear is from March 13th out there. That level, Jaime, is 62.2290, that little blue dash line on my screen out there. That is a level of resistance. If that gets broken, price should make its way all the way back up to the highs here from March the 9th. Getting above March 9th would be a nice positive thing. Now, this had a Rhodes momentum indicator top signal on March 9th. That's why that is a key level. The real support or additional support, besides the horizontal trading ranges out there, is going to be the low of February 16th. As long as that low holds, that's 60.4890, then support, in essence, has not been broken. Now, let's go take a look at the currency pair out here. Let's go take a look at the Australian dollar versus the U.S. dollar. And let's go ahead and take a look at our different profiles, our 60, our 120, our 5-hour profiles out here, and then the daily. In fact, let's just simply go over to the daily time frame. And here we take a look at the top and center of the box. What we'll see is that the top of the daily profile is 0.7117. And we can see that the high today was 0.7119. Pretty good. So resistance with regard to the Australian dollar, if the Australian dollar is going to change its trend, you want to see it close above the top of that box. Now, the top of that box is bearish, or the structure of this box, I should say, is bearish, because the center line is much closer to the top, or it's certainly closer to the top than it is to the bottom. So overcoming that level would be positive. And then what you'd be looking for is a move to this trend line that began out here on the trading day of December 3rd. The next touch point was January 31st. That's your Aussie dollar. As long as price holds 0.7019, no problema out there. But it is in a downtrend. So will support hold, or will resistance fail? We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We're going to go take a look at Goldman Sachs. But as long as I pulled up my 3-level chart out here for Boeing, let's go take a look at it, since I'd mentioned that it formed both a brand new daily and a weekly profile. The weekly profile is much easier to see if you're watching us on Tiger TV. That's the center chart that we're looking at, and you can see that the bottom of that box is 362.90. So 362.90 is a real key level of support come Friday. If we were to see a close below that, that would suggest a run all the way back down into the December area. If we take a look at the daily time frame chart, you and I know that we've just simply been watching the breakout area from the trading session of, what was it, January 30th out there. But the new daily box, the bottom of that profile, is going to be 370.20. We're trading just slightly below that. My take is that as long as price holds 367.78, no problems. When I say no problems with regard to where stock is headed to. If you were to see a close below that level, well, then I'm going to defer to a close below that level as well as a close below 362.90. Then that says where price would likely head to, because there'd be nothing to necessarily stop it, would be headed down to the December 26th area. Now, that low is 292. I don't know that price would get all the way back there. I'd be more watching the bottom of the monthly profile, which is 316.44. But 316 gets you back. Does it get you back into there? No, it doesn't get you back into the 26. Gets you pretty close, which was 314 at the high out there. So that's what I see when I take a look at Boeing. If we go take a look at ticker symbol GS, Goldman Sachs out there. Some refer to it maybe slightly differently. What we can see here today, who asked that question? Mr. Bill. So, Bill, what this did today, or what it's doing today, is it's trading above a level of resistance. Its daily profile, that's been in place for the last week, and that was at 199.09. So you're trading at 202.74. We can also see that the weekly profile is priced at 201.13. So you've got a double going out here. A positive double, that is. So as long as price is able to stay 190 above, close above 199.09, looks to me like we want higher price. Let's go back to the daily time frame chart. Looks like maybe there's a gap that we're not dealing with the gap, just simply the downdraft out here. Price is trading into, last time price was up here, Mr. Bill, was the trading of January 30th. There was 2.7 million shares. You're already at 2.1. So this has volume pushing into a swing point, meaning that what we could see here is an A to B equals CD to the upside. And that pattern, we'd start with the low on the 26th. We'll go ahead and use the high from January 30th and then the retracement down into February 8th. Now, that would give you a price projection in the 239.80 level. And you're asking, hey, what does this look like for the next several weeks? I think, where is it? Any thoughts on Goldman Sachs for days/weeks? So combination. So ideally what you would be looking for is a close above 203.29 with volume to give you that acceleration type move. What else can we look at out here? We pull over Stevie's other chart, tools. What we're going to see is prices actually beginning to move higher with less relative energy, but that alone is not a problem. The other nice positive here, potentially, depends on where the close is today, is my system says to watch the trading session from January 31st, that would be more important than January 30th, and that's that solid green dashed line, which price is trading above. The high of that session, by the way, was 202.35. That's that green resistance line set up by that Tommy DeMark set up a 9 count. It wasn't the 9 count that identified the bottom, but what it did do for you and I was it set up a natural level of resistance, which price is trading into as we speak today. If we do the old wave counts out here, if we go from the low on Goldman Sachs, the low back on December 26th, you know, you're either in the fifth wave out here, or if we go ahead and take a look at it from there, fourth or fifth wave, but not really a big deal. Looks pretty positive to me when I take a look at Goldman Sachs on the daily time frame. Well, really on the weekly too, because of its, whoops, didn't mean to do that, but let's try to do this, because of its move right now above the top of the weekly profile. Now, let's go with an assumption that price holds these areas or closes above the 203.29 today, tomorrow, whenever it does. Then the next area of resistance you would really be watching for would be 207.73. And that's the bottom of that weekly profile. Being able to get back inside that box would be a positive and suggest to move to 226.40. So them's my thoughts. Really, it's just the thoughts of the charts out here. Remember, our role always to be able to identify support and resistance and then any other patterns that are occurring at the same time. And so there you go. There you go. Like Gus from my big fat Greek wedding out there. I had some nice Greek food last night with a buddy of mine that I've known for nearly 60 years out there. He and his family and some friends out there. Always pretty cool to get together with friends. I don't see any other. Questions out here, so I don't know what to do. I am just kind of at a loss for words. Kind of hard to believe that that's the case. Gold, Tucker. Okay, so there we go. So Tucker's got us moving. You know, Tuck. If we take a look at gold, we don't like what's taken place during this last half hour. Gold's back $1.70. But if we take a look at what gold is doing during this last 30 minutes, the reason why we don't like it is because it's just closed below, or it's trading below the bottom of a 30-minute profile. Not that we're just going to make all of our decisions on a 30-minute chart out here, but we don't like seeing support fail. And support failed, 1302.70. So this would suggest to me, Tuck, that price could be headed down to the 2:30 a.m. bar out here, and that price level is 1298.30. Now, Moving below that would be even more problematic or potentially more problematic out there. Now, that was 30-minute. If we multiply times 10, that would get us to 300. See how quick I am? I mean, it's hard to get anything by me unless you try. And so what we can see out here, you get rid of that A to B equals CD at this stage. Just really been consolidating, so to speak, out here. The real key level, I would say, Tuck, on this 5-hour time frame is going to be that little hammer candle out here. Here's the hammer candle. This took place at 2 p.m. This was on the trading session of March the 14th out there, and that low is 1292.50. That will be a key area to be watching inside of Goldilocks. If Peter's in the den, he would say, and he would ask, well, what's gold doing in all those other currencies, Steve-O? So just in case he is, or maybe listening to the archive, we're going to go answer that question. And so what we would see here is in terms of U.S. dollars, that's the chart on the left-hand side, the one that says, hey, gold expressed in U.S. dollars. Boy, do we make it easy or what? Just sideways, right? Just slightly lower. We know that because we were taking a look at price. Gold expressed in euros is trading lower. Gold expressed in yen is sideways. And gold expressed in pounds is just slightly lower. So we're not seeing any major dislocations here, Tucker. But support on a 30-minute basis has failed. And it would suggest that we're going to see an even further pullback in the price of Goldilocks. We're not seeing any natural buyers out here, so to speak. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the question's kind of light today, but inside the Tiger's Den, Jay wanted to take a look at the market profiles. So if one person has that question, I figure more than one person has that question. And so what we have up on our screen right now is the ES Mini, the NQ, the Dow, and the Russell, and no new profiles out here. Here's what we know right now as of 1:30 in the morning. There was a pullback earlier today inside the ES Mini. It was testing the top of that weekly profile that it closed above on Friday. So old resistance has now proven to be new support. So that key level is 28.2575 out here. The NQ making a higher high today, as the ES has made a higher high. So there's nothing bearish there. Although we can look at charts and identify some potential issues out here. But the NQ, there's no resistance profile-wise that you and I see. The Dow, its pullback today was testing the top of its daily box, which it's broke above. So the weekly is what we were really looking at in the ES and NQ. When it comes to the Dow, it's the daily time frame right now, and Friday was a close above that. So it was a bullish move to close above a level of resistance. Today was a test of that high. That's, by the way, 25,818. Staying above that, there's nothing wrong out there. If you're bearish, and I sort of get it, I understand some of the warning signs that are out there. Be careful, because it really is not the message of the ES Mini, the NQ, or the YM, the Russell, as we speak right now. Nor is it really the message here of the Russell 2000. Now, the Russell 2000 got up to the weekly point of control. We know both buyers and sellers hang out there. They think there's fair value. I'd say at this stage there's more sellers there. That's 1573 and change out there than there are buyers. But nonetheless, price, and that's also the top of the box, is 1559, which was tested. We're trading slightly above that. So even the Russell 2000 looks pretty bullish right now from a daily perspective. If things change, that's a different thing. We got to go with what we got to go with, what we got to go with is kind of the message of the markets as we speak right now. Seeing into the future, only one person can do that, and that's Jay in the Tiger's Den and his 8-ball out there. But other than that, I don't know any other way to call it. Now, is there resistance? Of course there is. If we take a look at the ES Mini as an example, and it would look like this for the S&P 500, what we see is prices moving higher, doing less relative energy out there. But that alone is not does not mean back up the truck. It just says watch the truck. Just says be careful. Look for that bearish reversal signal. Not in place as we speak right now. If you're a wave aficionado, and there's all kinds of waves out there, you're really only in wave number 2 when it comes to the daily chart for the ES Mini out there. Now, if we take a look at what else is going on inside the ES Mini, we can see it is definitely at a resistance level. But I like to wait for some type of signal, because we don't know if resistance is going to fail or not. I don't know if it is, but we can see at this 28.35, 28.45, back to those horizontal trading ranges out there. And by the way, horizontal trading ranges, a great tool. I show people how to do it manually, so you can apply it to your chart. It's very easy to do that, and there's an archive workshop that's going to be released to clients in about, today's the 9 days. Next Wednesday, I think, is the date out there, is when that's going to be released to them. If I look at using those same levels on an intraday basis, a 5-hour time frame chart this morning, subscribers knew this morning that the newsletter was out by 8:30, I think it was, somewhere right around there. But they knew that the setup in the market was bullish for the instruments we just took a look at, and very likely where the ES Mini was going to head to is the 28.39, 28.40 level, which is exactly what it did before it then went ahead and backed off. Why? That was just simply the natural horizontal trading range boundary line out there on an intraday time period, and we set those up to be gold, isn't Goldilocks. Now, if you take a look at the NQ on a daily time frame, if you're a believer that the NQ is the one that's got to either take markets higher or lower, well, then it says it wants to take markets higher right now. Now, the reason that we say that is because it's above all resistance, right? We looked at that TAS market profile, daily, weekly, it's above it. If we take a look at the horizontal trading ranges, the weekly and the monthly out here, the red and the green numbers out here, and daily, it's above that too. And so its next level that it wants to target is 74.92 out here. That is its message. On a daily basis, or an intraday basis out here, the price target that we gave earlier this morning was 73.77. Well, it hit that mark and gave that up, and now it's just pulled back to a little rising trend line level that was established back here at about 9:30 in the morning on the 25th, as well as 9:30 in the morning on March the 4th out there. Is that it? I don't know. Is there a bearish reversal signal on a daily time frame? No, there's not. If we take a look at what else is going on the daily time frame, I don't really have any topping patterns to speak about here. We've got support at 72.90, but unlike the ES Mini, the NQ is just all hunky-dory out here. And so, you know, maybe we've got to take a look at those FANG type stocks out there. Maybe they're going to get some mojo going. If we take a look at the Dow equity futures contract at 2, you know, there's nothing really of significance out here, topping wise, so to speak. On Friday, what we saw price do was close above this little blue dashed line out there. Closing above that is a bullish event. We're still above that as well. So, you know, all the things that I look at inside of the Dow suggest that it too wants higher price. If we look at its horizontal trading ranges out here as well, some diagonal stuff. Looks to me like this wants to get into the 26,050-ish type level to 26,160. So you got a little bit of a 100-point move there, but it does look like it wants to continue to move higher. Now, intraday, hey, just support is held. So unlike the ES and the NQ, which on a 5-hour base, that's what we're looking at here, just simply, you know, has moved to a higher has moved to its price target. The Dow has not. But what the Dow has done is it's held the support area. The support area, on a closing basis at 25,839, we've seen 24 opens or closes occur at that price point. So that's really important. What happens if price closes below that? Excellent question. I would then say your target becomes just a simple trend line from the 9:30 session on March 14th, as well as the 9:30 session, the low of, on March 15th out there. And like today, that'd be about 25,700, give or take, to 25,640. That'd be your downside action. But right now, support is held. So the upside action would be 26,037. So that's our run through with regard to what Stevie sees inside of the markets out there. Was there a question? Yeah, FOMC's on Wednesday. I show a bearish box on the 60-minute TAS for what, Tucker? For what? What's the 60-minute what? The 60-minute gold, the 60-minute. Tell me what we're looking at out there that you were, and I'll pull that up. Whoops, new one formed and balanced. Sorry. Okay. The Russell. Oh, second message. Okay. All right. So I'll pass on that. Since you're kind of giving me the pass sign, so to speak. Yeah, still no other requests out there. Throw something in the during this commercial break out here in the Tiger's Den, or send me an email, steve@tfnn.com. Quiet out there. Maybe people were drinking a little too much this weekend. Is that possible? Can't be. Steve Rhodes with TFNN. Dow's up 12, S&P 6. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we've got a couple of requests. Thanks for sending those in. The first one, wanting to take a look at the semiconductor index. The request was made to go take a look at it via the SMH out there. We'll do a couple of different things out here. That's the ETF. To play it. But if we look at just simply the semiconductor index out here, it was a beautiful move on Friday. That move was taken out, just a simple short-term resistance level out here. And this would suggest to me that what price is doing out here, I think, Bill, you asked that question. The semis look to me to be headed to the 1411 area, 1413 area, really back to the highs in September out here. That's really its next level of resistance, so to speak. So that's what I see when I take a look at this chart. If I pull over this chart here for the semiconductor index, we're going to see that Friday's move was pushing price higher, doing with less relative energy. We pay attention to those patterns because they're good at identifying bottoms or counter trend rally areas. And certainly the bottom back here, back on December 26, that was the exact pattern that formed out there, and that was with the bull sash candles, was a key reversal session where both the high and the low of the prior session was exceeded. If you're a wave counter out here, you're only in wave number 2 to the upside. That's what Stevie's got it at. Today's move pullback was nothing more than a test, a bullish test of Stevie's green line out here. That's 1380, 46 or so out here. Don't worry about the pennies. And so just simply support was tested. So you break out above resistance on Friday. Today you just simply pull back intraday and do a test of support. Everything here on the semiconductor index, to me, Bill, looks bullish. If I go take specifically a look at the 3 different time frames for the SMHs out here, and we look for our market profiles first, we have a new market profile. It's a bearish in structure for the monthly time frame. And that says that at 109.87 is really where you've got some resistance to consider out here. Now, the reason you consider it, that is a bearish structured box. It's a brand new profile formed here in March. And if price can close above 109.87, boy, that would be very bullish. You're above the top of the boxes, or resistance in the case of the daily and the weekly out here. And if you take a look at the daily and the SMH, the swing point that price took out was from February 25th, that had 4.9 million shares. He did it with 8.4 million shares on Friday. So the semiconductors look long and strong out there. Now, Stevie will change his assessment, because the chart would change its assessment if we were to get some type of bearish reversal candle. For example, today would be one of those examples. We don't. What's taking place today is a test of support. That held. What does this say? It says more likely than not, price is going to head higher in the semiconductor index space. So I hope that helps you out with regard to that. The next question that came in was from John in the Tiger's Den, and his question was, is the comp about to top here right in the vicinity of the Fibonacci 0.786 level? So what he's referring to there is, let's pull up the NASDAQ Composite Index, and he's referring to the retracement level, or should be referring to the retracement level from its all-time high out here. I believe that was on August 30th, 2018. We'll go take a look at that and make sure, down to low on December 24th. And that would give you a price level of 77.17. And we could see that price hit that on Friday. Yeah, that is the all-time high that we used out there. It hit it again today. Price just trading above a slight little rising trend line out here. It's always a potential, right? So it's always the potential out here for a top to form. But what would be the confirmation of that? Well, if we go take a look at the NASDAQ Composite chart out here, we pull over Stevie's other tools. What we clearly know out here, John, is that this is only in wave number 2 on the Chapman wave scale, or at least that's what Stevie believes. It's only in wave number 2 on the Chapman wave scale out there, saying that there should be 4 waves to come at least. Now, price is moving higher, doing less relative energy. There's a number of indices that have this pattern. We pay attention to those patterns. We just pay attention. You don't trade them until you get some type of confirmation. And the confirmation here would most certainly need to be some type of bearish reversal candle. Otherwise, you're asking me to see into the future. I'll see into the future when the past, which would mean today, it doesn't need to be like a lot of past, just simply when the past, could be just 24 hours, really, just 6.5 hours worth of trading would suggest otherwise out here. So is it potentially a high? Sure, but if I were to look at this chart, which we are looking at this chart, by the way, this says no. This is no, it's not a high. It says it's too early for the high out here. And price is trading above Stevie's green line as well. That's at about 76.66 out there. Sounds devilish, but it had a 7 in front of all those 6s. So, no, I don't. If you're asking, is it got potential? Yeah, but do I see the sign of a top out here as we speak? No. Now, if we dive down below the composite, What the heck are you talking about, Steve? Well, I mean, look at the NDX 100, right? Because we can go take a look at the NQs. You know, we looked at the NQs on the daily and weekly time, price above profiles. We looked at the horizontal trading ranges, price above profiles out there. You know, there's no failure, so to speak, out here. If we take a look at the NDX 100, also, from my thinking, has to be in the second wave. And no, Rhodes momentum indicator top on this. So the NDX 100, no failure in sight out here. If it's about to come, I can't predict that. There's no tsunami wave siren that's gone off in Stevie's ears or head out here that suggests otherwise. Yeah, I see your 0.786 retracement. Absolutely. People getting off the elevator. That's what these, it's how Stevie likes to take a look at these retracement areas, because so many people know about them that somebody wants to go ahead and give something a shot in a counter trend move, will be paying attention to those levels out there. So totally get it. I just don't see the signals to tell us otherwise as we speak right now. Now, what we can also do, not to beat a dead horse. This is not a dead horse. Well, some people might call me a dead horse. But if we do take a look at the intraday time frames here for the NQ, Yeah, there's some resistance on the 2-hour time frame chart for sure. There is 73.53 bear structured box on the 2-hour time frame. We'll kind of skip the 1-hour time frame because the box here on the 2-hour more likely to have hold for a longer period of time. And we've got a orange colored bar on the 60. So I don't want to, it means a new profile could be forming. So I don't want to spend any time there. So it's traded up in resistance, but no level of support that has broken out here. And so that's what I see when I take a look at it. Now, the other thing with regard to the NQ, right, because we should always know, you know, what's happening on multiple levels out here, not to confuse you, but instead to maybe kind of bring things together. And if we take a look at the weekly time frame chart out here for the NQ, what we're going to see is that we've made a higher high today. Now, we know that last week was number 9 in that Tom DeMark setup 9 count out here. And we also know that a turn can come on bars 8, 9, or 10. Well, now it's got to be bar 10. Not really bar 10. It's the bar after bar 9, which some people would call bar 10. So maybe, but I don't see it just yet. I hope that answers your question. If not, let me know why not. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. 2-minute countdown here. A couple of questions that have come in. The first one is to take a look at light sweet crude. We had not. Here are the 6120 5-hour daily market profiles out here. Green shoots basically everywhere. Maybe slight resistance at 59.23, the top of a new 60-minute profile that formed as we were coming on the air. But if we look at the daily time frame chart out here, it's above resistance. Everything looks pretty good here. Nothing but higher highs and higher lows in this what appears to be counter trend rally. Now, if we go take a look at my other daily time frame chart out here, again, nothing in sight that I see with regard to any type of topping signal for light sweet crude. It did get to wave number 7. It has exceeded that, and by exceeding that, what that does is that gives us a new wave count only in the first wave to the upside. Looks to me where like light sweet crude is headed to over the long haul is the October 30th high out there. That price point, by the way, is about 69.02. So Tucker, that's what I see when I take a look at light sweet crude. Hope that that helps you out. We had a question that came. Oh, by the way, there is one other area of resistance. Here's your horizontal trading range. So 59.83 on a weekly basis. We've seen opens and closes there 28 times. Now, that 28 times takes you all the way back into the 2002 time frame out here. So that's another level to be watching. But boy, you clear that, you're looking at 65 to 71 bucks out there. So watch that 59.83-ish level. Had a question come in. This is from CM. Chris wants to take a look at GBX. GBX out here, you've got a nice day going on. I'd really like to see this. If you're looking to buy this, today, by the way, could be count number 9. But if it closes above 37.85, then that 9 count will get wiped out, and we can't use that as a bottoming signal out here. So, Chris, I think this is the first message from you, and you deserve more time than just 10 seconds. So tomorrow, I'm going to look at the GBX for you, Greenbrier Companies. Folks, thanks so much for being here. Stay tuned. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you on. No, I won't be back tomorrow. Listen in at between 8 and 9. I'm going to tape the show.